Today we're going to see what hidden fund trampled the S&P 500 for over 40 years, introducing FSELX, or the Fidelity Select Semiconductors portfolio. We'll unravel how to examine its performance using key financial terms and indicators. So buckle up and prepare for a deep dive into the world of investment performance indicators. Stay tuned as we find some shocking data. To start, let's familiarize ourselves with some essential financial terms. First up, we have CAGR, or compound annual growth rate. This is a key measure of an investment's annual growth over time. It's the mean annual growth rate of an investment over a specified period of time longer than 1 year. Next is the standard deviation, often abbreviated as SANDEV. This is a statistical measurement that sheds light on historical volatility. In the world of finance, volatility is a measure of the price fluctuations of an asset or of a portfolio. A higher standard deviation means the price of an asset is moving more drastically compared to assets with lower standard deviation. Then we have max yearly drawdown. This represents the largest single drop from peak to bottom in the value of a portfolio before a new peak is achieved. It's an indicator of downside risk over a specified time period. Now let's talk about the Sharpe ratio. Named after Nobel laureate William F. Sharpe, this ratio measures risk-adjusted performance. It is calculated by subtracting the risk-free rate, such as that of a US Treasury bond, from the rate of return for a portfolio and dividing the result by the standard deviation of the portfolio returns. The Sortino ratio, similar to the Sharpe ratio, is a statistical tool that calculates the risk-adjusted return of an investment portfolio. However, the Sortino ratio considers only harmful volatility, not total volatility. It's a useful way for investors, analysts, and portfolio managers to evaluate an investment's return for a given level of bad risk. Lastly, we have market correlation. This is a measure of how closely different securities move in relation to each other. A correlation coefficient of 1 means the assets move perfectly in sync with the market. A correlation of -1 implies the assets move in the opposite direction. With these terms in our financial vocabulary, we can now analyze FSELX's performance. Now let's examine the performance of FSELX using these financial terms. To start, FSELX ended with a final balance of $116,106, which is slightly higher than its own past performance. This indicates a positive trend in its growth. The compound annual growth rate, or CAGR, is at 11.21%. This number represents a slightly better growth compared to FSELX's previous performance, showing that the fund is growing at a steady pace. When we look at the standard deviation, it's similar to FSELX's own past at 30.42%. This indicates comparable volatility, suggesting that the risk involved in investing in FSELX remains the same. The maximum yearly drawdown is slightly lower than FSELX's past at -50.54%, suggesting slightly less downside risk. This means that the largest drop in value that occurred from a peak to a trough during a specific period of time is less severe than before. The Sharpe ratio, which measures risk-adjusted performance, is slightly higher than FSELX's past at 0.46. This shows that the fund is providing slightly better returns for the same level of risk. Similarly, the Sortino ratio, which also measures risk-adjusted returns but focuses on downside volatility, is slightly higher than FSELX's past at 0.68. This suggests better performance when considering the negative fluctuations in the fund's returns. Lastly, the market correlation matches FSELX's past performance with a correlation coefficient of 0.81. This shows that the fund's returns are closely related to the returns of the market. Now that we have analyzed FSELX's performance, what does this mean for potential investors? Understanding these financial terms and how they relate to FSELX's performance can greatly benefit potential investors. With a final balance slightly higher than industry standards, FSELX showcases promising growth. With a dividend yield of 0.09%. This is further supported by a compound annual growth rate of 11.21%, indicating a robust upward trajectory, with an expense ratio of only 0.69%. However, it's important to recognize the standard deviation of 30.42%, which suggests a certain degree of volatility. Yet the maximum yearly drawdown is slightly lower, hinting at a lesser downside risk. Furthermore, the Sharpe and Sortino ratios, which are both marginally higher than industry norms, point towards better risk-adjusted returns. The fund's market correlation of 0.81 also mirrors the industry, indicating a strong alignment with market trends. However, as with any investment, potential risks and market fluctuations should be taken into account. Remember, a well-informed investor is a successful investor. We've covered a lot of ground today, from understanding key financial terms to analyzing FSELX's performance. We've seen how this fund has shown strong results over time, with a compound annual growth rate of 11.21% and a final balance higher than many of its peers. It's crucial for potential investors to grasp these concepts to make informed decisions. Remember, knowledge is power in the world of finance. Thanks for joining us today. Don't forget to subscribe for more insightful videos on investment strategies and financial growth.